Everybody, this is Kel from Trade with the Boys. Now, has the bear finally arrived? Now, there will be a lot of people now calling for the bear. We have informed you way in advance in October that to be very careful. We give you a very specific number to watch out for, and it all is happening. Now, we will not really declare the bear yet because it's still the Dow Jones is still and S&P is still above the minus 15% mark. So we will just want to watch this closer, but undeniable, like Hang Seng, you're talking about Chinese market, China, we're talking about the crude oil prices. Now, these are all in the bear territory. So will the bear really come in will all depend on tomorrow night. What will happen with the FOMC meeting? Undeniable, people are looking at a rate hike. That was early this month. But now with the market tanking, the market just doesn't want it happening. So what I believe is that Powell will actually hike the rate tomorrow morning, but he will probably add in a sentence or statement to say is that the next rate hike will be probably when the economic data or the economy is able to take on this thing. So we are still optimistically expecting that there should be some support very soon. But if the market do not see from that point and start to sell down again, 22,908 could be the next level to watch for the Dow Jones. Now, if we compare notes of what happened earlier this year, like JP Morgan, Credit Suisse, UBS, they were looking at S&P target at 3,000. But as of now, today, we know that S&P is trading at 26 region. So we are 400 points away from the current of the target. So this tells us that even the big boys can make their forecast wrong. Okay. Now we look at this chart here, you can see very clearly there is when the market was doing in tangent, everybody was doing the same movement here, it was cool. But when the Nasdaq moved on its own, got the FANG stocks, you can see that the rest of the market like central bank, Nasdaq, and world indexes and all the other bank stocks were coming off the wall. You can see that this is actually pretty ugly sight. Now finally the market is seemingly coming in the same direction, but you can see that it's very far-fetched from one another. So if the market do continue to fall, I cannot imagine how much lower can all this be going. Now, this is a very important chart to take a look. Now, this basically tells us that this is the blue line telling us the Federal Reserve, how much I've been buying through the QE's quantitative easing measurements. Now, the S&P obviously has benefited because of this QE buying. But look at here, when the Federal to taper off a little bit of their buying, you can see the market went into a little bit of volatility. And after that, when the earnings from all the good earnings from this few years had come in, they propelled the market higher. And towards the last part as well, there was a lot of share buyback, right? Remember? But all these things come with something to watch in the start of this year, whereby Federal Reserve has started to taper off their assets holding. So you can see that they took out some from the market. And interestingly, the market did not react until now. Because if they are selling, someone has to be buying. And may I know who's buying? If the boys are not buying, probably you should know that the retail are the ones suffering. This is going to be very dangerous in the market. Now, what thing is going to be very concerning to me now is how Berkshire Hathaway or Warren Buffett sees about their portfolio. Now, back in August, you can see that the Warren Buffett bought in lots of Apple, Goldman Sachs stocks, right? That was back in June, July period where he bought in. Now back then you can see Warren Buffett buy new stake into JP Morgan and Goldman Sachs. But the thing is that based on the last report, he bought in on the near to the end of June. So let's say he bought at the lowest point. Okay, that's around June area at about 220. But today, Goldman Sachs is $171. We're talking about $50 away. And there's something speculated up is about whether it's the US broker involved in the IMDb issue. And if let's say something do come out from there, I'm not too sure how would Goldman Sachs share react. And this is going to dent into Berkshire Hathaway earnings. I'm pretty sure of that because that's all the extra exposure. But don't forget, the biggest exposure that he has now is actually Apple. Since the end of June, Warren Buffett bought more Apple. Let's say he bought right over here near the extreme low, about $180. And now today, Apple shares trading at $166. So it's $20 off from his last buy price. So if Apple shares doesn't recover, or the earnings can't come in, this is going to be very frightening for a lot of people. So a lot of analysts back then were upgrading the shares and saying that Apple share is good to buy, and the average price they were upgrading was at 220 series. So now they are all suffering, and they had to redo their forecast pass once again. Now this is what's happening now. Okay, this is the profit expectation. The market have dived down in 2018 in terms of their expectation. As a matter of fact, they're looking at negative earnings, and this from Merrill Lynch by your understanding here through a survey. Right, and this one is going to be the very scary part. Apparently, since 2014 to 2016, the number of algorithm trading itself in the market has surged to 70%, primary in US. Now you understand why there's so much spike around the chart, because all these are traded by their robots. So I believe that this algorithm trading, right, might actually trigger another 1,000 point to 1,500 points movement in a single day if actually the market do move in that Dow level. This can be very frightening. So let's look at the chart now to understand the thing deeper now. You can see once again, this is S&P 500 chart. So you can see now it's trading at 2550, sorry. Okay, and this is the level I'm looking at as 24.99. So we're talking about this level probably might be triggered in the near time to come. And of course, the Dow Jones have just did a death crossover, basically closed near the low. So I did expect a recovery today. So after that, the thing could come in. Will the Dow Jones recover back above the 24,000 level? Or if not, there could be a one single traffic way all the way to 22,908. I'm looking at a very strong support here at 22,908. So traders who are still in a position, be careful of tomorrow FOMC. It could bring a rally up, but if the market can't react accordingly, then do watch out at 22,908. This could be the next level to watch seriously. Alright, hope this video you like it. This is Kel signing off.